Well, last night's positive session on Wall Street, during which all three main indices hit fresh highs for a second consecutive day, was followed by a largely positive session overnight in the Asia-Pacific region. Hong Kong and Shanghai both rallied on reports that the authorities may intervene to support equity markets. Well, in Europe, stocks are largely trading to the downside this morning. Talking points today include Swatch, which is off 2% in Zurich after its 2023 results came in below forecast. Well, here in London, the FTSE 100 also hold below the waterline. The healthcare heavyweights are weighing on the index this morning. There aren't that many notable features to talk about in the FTSE, but there is among the mid-caps. The house builder Crest Nicholson is up 0.5% on news of a change in chief executive, up a fifth of 1% now, while its peer Vestry is up 1.5% on news of a contract win in the affordable homes development space. To the downside, the recruitment firm Staffline is off 7% after results disappointed. On the foreign exchange markets, so the big story today is the US dollar. It's had its biggest one-day fall against the yen in a month. That's after the Bank of Japan hinted at a tweak to its ultra-loose monetary policy next month. Sterling unchanged against the dollar and the euro. Single currency off by nearly a sixth of 1% against the greenback. As for the oil price, well, it rose overnight following news of the West strikes on Houthi militia. It's given up some of those gains as the session has worn on. A barrel of Brent crude currently changing hands at $79.36 a barrel. That's off a little under 0.9%. Well, joining me this morning is Dr. Jimmy Mushesha-Terry, Senior Equity Analyst at Investec Wealth and Investment. Jimmy, good to see you this morning. What did you make of the public borrowing figures? I mean, everyone knew that interest payments were falling due to lower inflation rates, but people have really been caught out by this number.
Yeah, 100%. If you look at the numbers, they came in at 7.8 billion. Consensus was sitting at 11 billion. And even the OBR forecast was 14 billion. So that was much less than what everyone expected. And really, it came down to those borrowing costs. If you look at the government spending, that was the big driver of this. So tax take was actually lower. The government tax take was actually lower than what everyone expected. But it was really all about that interest payment on the debt.
I mean, we have another 3 months of the financial year to run. Inflation remains coming on the downward tack here. Does this mean potentially Mr. Hunt is going to have more scope for tax cuts?
100%. I think one could almost hear 3 cheers down in Whitehall this morning. They couldn't ask for a better report, to be honest, because it gives the Chancellor a lot of wiggle room come the 6th of May, that spring budget. Yes, whatever the Bank of England does, driven by the inflation, is going to mean a lot in terms of the impact on the public borrowing. But there are 2 key things that we're really looking out for when it comes to the budget. Perhaps, you could say the good graces of Mr. Hunt in an election year. One is a 1p freezing to the income tax rate. That typically costs about 6.97 billion a year. So, that could easily come in. Another one could be a freezing of the fuel duty. That costs another 6-7 billion. And they could do both of those measures while retaining this aura of being fiscally prudent as Conservatives.
Interesting. Now, there's not a lot of company news around today, but AB Foods is probably the standout. What did you make of the figures there?
Yeah, I think for a company that owns a whole lot of different things, it will always be mixed. But generally speaking, it was a fair to solid trading update. So as you said right at the top of the show, AB Foods owns Primark, which most people would know. And Primark accounts for about 50% of sales. Like-for-like sales were up 2%, as you said. It was a creditable performance given how rocky the start was. So unseasonably warm weather in October meant that, Primark sales were a little bit slower. But the Christmas trading period was pretty good. They actually managed to drive both volumes and average selling price. So that was good. The grocery business, that accounts for about 20% of sales. Kingsmill, as you said, Twinings, the tea brand. That was also pretty good, driven particularly by the US markets and the Twinings tea brand. And then the sugar business, which is about 12% of sales, that had a very, very poor year in 2023. So, it's bouncing back off the bottom. But in general, the shares are up 1% this morning because, firstly, they said they are sticking to their guidance for the Primark margin of around 10%. And secondly, the problems we've seen in the Red Sea are not going to weigh on the financial results of the company.
All right, Jimmy. Got to leave it there, I'm afraid, this morning. Good to see you, guest ever. Thank you.
Thank you.
Now, last year saw a good deal of soul-searching about the future of the London stock market as a number of major companies moved their main listing to New York, while the number of initial public offerings fell to its lowest level in 14 years. But research published today by the equity management platform Legi suggests that almost three-quarters of UK tech companies would prefer to IPO in the UK over any other destination. Well, joining me now is Joko Spirig, the co-founder and chief executive of Legi. Joko, this is quite counterintuitive, given all the commentary.
Yes, indeed. Good morning, Ian. Thanks for having me, first of all. Yes, indeed. So what we do at Legi is we help thousands of pre-IPO companies manage their equity. So really, to be clear, companies that are looking to be listing very soon. And indeed, we run a survey with them every year. And this year, one of the major findings we've had was that the majority, so 75% of those said they would want to list in London, which is a surprising finding indeed, given the macro context here.
Now, you spoke to 2,500 businesses across 10 major markets. Are all of them as loyal to their home markets as UK tech firms appear to be?
So not all of them, I would say, but our core market, we have, in fact, customers among more than 45 jurisdictions, but our really core market, our core focus is the UK. It's also the most thriving environment within Europe in terms of the tech activity, and so really within those our major market, which is the UK, again the majority of those have replied that they would be listing in London. So that is, I think, a really interesting fact.
You found that more than 1 in 5 of the companies you spoke to deprioritised IPO plans last year. Does that mean there's a bit of a backlog building up? Does that mean we could see more IPO activity this year?
Absolutely. So it remains to be seen, when the timing of when exactly markets will really pick up. But what we believe is that, Europe in general is really going through a tipping point. The maturity of the general tech ecosystem is extremely maturing. And so, it's just a question of time until IPOs pick up again. And we're very excited that, the intention among our pre-IPO customers is very much to be listing in London, in Europe, which is, we think, really a chill for news for the ecosystem.
Which are the other markets where you would expect to see a pickup in activity apart from London?
Well, our 3 major markets within Europe are really the UK, France, and Germany. So those are our focus markets. And we expect to see really those 3 ecosystems pick up. That's also what we observe overall in terms of the general entrepreneurial activity. That being said, we can see in general that London is in fact ahead right now. But we believe that the UK, there has been a lot being done by the government in the UK to continue to encourage that entrepreneurial activity, even with things like Brexit and so on. So the challenges are still there, but we believe that a lot has been done in a positive way in the UK.
And for people who may not necessarily be familiar with your business, tell me a bit more about what you do.
Yeah, so what we do, maybe to in a nutshell, right? We've really started the company because in Europe, pre-IPO companies, the majority of them were using Excel sheets to give out stock options to their teams. And this becomes actually really complex, especially in Europe, because what we face here is a fragmented jurisdiction, which is really different than, for instance, in the US. And so we decided to build a platform, a software to really make it easy for teams to give equity to their employees, because that is a major component in order for an entrepreneurial ecosystem and for startups to really thrive and grow in the future.
Well, it's an encouraging story to hear. Joko, good to talk to you this morning. Thanks very much indeed for joining me.
Thanks so much, Ian.
Still to come here on Business Live. New investment to funds Europe's ambitious tech startups. Don't go away.
United Kingdom.
These last few years have seen some huge stories. And these stories have been driven by politics, by politicians, the people in power.
You must stay at home.
And it's my job to figure out how these decisions made by politicians impact all of us in our everyday lives.
This is the worst thing I've ever been through in my life.
People turn up here with their child stuff in a black sack and just say, I don't want to.
And that is what it is. It's first-class poverty.
Is this an example of the welfare state failing?
We take you to the heart of the stories that shape our world.
These are stories that affect us all. Millions of children are now having to catch up. Some stories have changed all of our lives. Because like the residents, the staff are being infected. Politicians, they make decisions all of the time, and it's our job to hold them to account.
I wonder if you will take this opportunity to apologise to those families.
But in the end, the real power doesn't actually lie with the politicians. The real power lies with the people. I'm Nick Martin. I'm the People and Politics correspondent at Sky News.
Fly Emirates, fly better. Fly Emirates, fly better.
Thank you.
Welcome back. Plural, a tech investment firm led by some of Europe's best-known entrepreneurs, has raised €400 million to back the next generation of startups. It comes just 18 months after Plural, whose investors include the Wise co-founder Tarvet Hingrikus and the UK government's AI safety czar Ian Hogarth raised an initial €250 million. Well, that capital has been put to work in 26 startups across Denmark, Estonia, Germany, the Netherlands, the UK and the United States. Well, here with me now is Karina Nami. She's partner at Plural. Karina, welcome to you. I mean, there was a bit of a funding drought in VC last year. How have you been able to buck the trend?
It's true, it's been a difficult market for our industry, but for us it was surprisingly straightforward. And I think it really comes down to two things. We are really telling the story of Europe and championing the fact that there is a huge amount of talent that is building an unprecedented number of companies in Europe, and a lot of really sophisticated LPs on both sides of the Atlantic have gotten really excited about that vision. The second point is we are backing founders with a lot of founding experience ourselves. So all 5 partners at Plural have built businesses in Europe, and we're not tourists, we're here to stay, and we know what it takes to build these significant businesses.
Nonetheless, it's quite striking that you've raised quite just as much money as you have done, only 18 months after the first funding round.
Yeah, so this is a €400 million fund of fresh capital to deploy. And, we take a very deliberate pace in our investments. So each of the 5 partners will make 2 or 3 investments a year. And that's because we really want to spend deep time with our companies and bring all of that operating and founding experience that we've had to bear on those companies to really transform the trajectory of the missions that they are going after. Is
that what you think attracts businesses to you? The fact that you are all founders, as you say, you've walked in their shoes effectively, some of these founders. Absolutely. I mean, it is quite surprising that in Europe that is still unusual. So less than 8% of investors in Europe
have founded and built businesses themselves. In the US, it's the vast majority. So really, the ecosystem in Europe is maturing to the point where operators and founders who've built businesses like the five of us are coming back into the ecosystem as investors and bringing all of that scar tissue and all of that experience to help these companies tackle really consequential missions, which is an incredibly challenging thing to do. And so they need every bit of support and experience that they can get behind them.
So tell me about the sectors that you're targeting.
So we're really a sector agnostic fund, and we're really led by the quality of the founders that we meet. And they take us in very interesting directions. We make sure that we are very deep on the technology trends of the day. So if you look at our first fund, about 30% of it was in applied AI, and these are areas that myself and my partners have spent many years in. We also invested a lot in climate tech, and Europe has an incredibly strong technology and science base. And the last sector that was quite significant for us was frontier tech. So that includes things from robotics to materials to nuclear fusion. So we're really not afraid of going after the really big, ambitious missions that are being built here.
Yeah, these are big, challenging sectors in some cases. Nuclear fusion, for example.
Yes, I think it's time for all of the technical capabilities that we have, be it AI, be it computational modeling, to be applied to really consequential missions, tackling systemic risks, tackling the opportunity gap, tackling climate change. And it's clear that a lot of the market in early stage investing is moving in that direction, as we recognize that actually a huge amount can be done using the technologies of today.
A lot of people are very, very anxious about AI. What would you say to someone who's worried about losing their job?
I mean, look, I think it's clearly going to cause big disruptions in the labour market and really change how we all need to think about our jobs and our roles. But I remain very optimistic that actually AI can enable and free us all to work on more important and impactful things. So from our portfolio, a couple of examples. There's Teton AI, which is AI capability for nursing staff in care homes and hospitals, where there's major shortages of skilled workers. And so using AI to really help them do their jobs faster and more easily, I think that's a testament to the capability of this technology. And then Robin AI, which is a legal tech company that provides a sort of co-pilot for legal teams and helps them get their work done far more quickly and get rid of the legal drudgery that is otherwise, holding them back from thinking about more interesting things.
So people who are worried about AI perhaps getting a bit carried away?
No, I think we clearly need to think very carefully about how we reskill, how we think about the next generation and getting them ready for the jobs of the future. And, these are significant questions anytime a major transition in technology comes along. All
right, Karina, got to leave it there. Great to see you this morning. Thanks for joining me. That's it from me for now. I will be back at 4:30 with our afternoon edition. Hope very much to see you then. In the meantime, do stay tuned. Coming up next, it's Jane Secker, and we're told Rishi Sunak will be speaking in the House of Commons at 12:30. Don't miss that. See you later on. Cheerio.